Hi, everyone. Brock, excellent call on that cycle for the 18th. Think it may work. I remember I asked Norm and about the 18th because you posed that question, and he goes, "Why look at the 18th? All the big stuff is happening around the eclipse." So you must have some astro training. Okay, so it's MLK Day, guys. All right, so we're pretty slow. Martin Armstrong? Okay, well, he's one of the best. Okay, I've interviewed Marty a few times. Used to listen to him on the radio here in Southern California. Very interesting model that he has. He said that the government wanted it. That was part of the reason he had legal issues. He wouldn't surrender his model. Interesting story. There is a movie called The Forecaster. Check it out. It's probably online now. Yeah. So let's talk a little bit about the markets. But before, if you don't know who Martin Luther King is, just imagine the extreme opposite in every way of President Trump. And there's Martin Luther King. Although they did share one thing in common, their second brain. They were married and had affairs. So I guess no matter where you are on the moral compass, it's too much for everybody, including David and Bathsheba. So, gold's coming off a little bit from this 1560 area. And this may have been it, but I have to be impressed how it held last week in the face of, we've seen it before where gold can hold and while the dollar's strong, we've seen that. So it also held up with a strong week in US dollar yen, which is also starting off like, we need another high. The breakout's still good. I may end up not taking a little bit of a hit because I'm already in looking for a false breakdown, I think. And the reason is, which I don't know, maybe in doubt now, we don't have US markets, but I was thinking last week that we're on the verge of having a breakout in TLT. And look at this compression. It's got to end soon, right? So option guys would do vol spreads here. They buy puts and calls, knowing that when we come out of this compression, there could be a pretty good move one way or the other. And my bias is still that we come out to the upside. And part of that, when that happens, could be more left in gold if the yen comes off. So that's how I'm seeing things. And, we're at a lot of guys that got a lot of action on Twitter about S&Ps, and some guys are saying we could still have a gap higher opening tomorrow when the world comes in, and that's very possible. We're still, the momentum readings are still pretty good, even on the hourly. Up here we're over 7, so I don't know. I might take another shot with just like some type of money stop at new highs here. If we get them on Tuesday, or you have a piece of NASDAQ on. NASDAQ again on Friday was starting to demonstrate a little more relative weakness. So we'll see. See the RSI pattern here in NAS is not confirming. While the momentum is not confirming here in the S&Ps, but you see we're over 70, under 70. And if we rally again, I think we'll be to new highs. I think the RSI will not attain readings above 70. Yes, we have Davos going on. So we should be hearing from a lot of the, besides the heads of state that go there, I also believe all the, big shot, well-known hedge fund guys and stuff are there to get their comments, and it's be interesting to see what Lagarde says. And as long as you bring it up, I was thinking that we had a dollar top, and it didn't hurt me to when I was buying dips in euro, and I certainly don't feel like shorting it up here, but I don't know. I look at the weekly from last week, maybe it's going to hold, but I don't know. Almost looks like an ABC unless we get one more wave. I was looking for this, 112 was the first target, but I certainly thought that we had at least 114 in it. I know a lot of people are just saying arithmetically, if you look at this, like a shoulder, a head, neckline, right shoulder here. So 1080, call it 160 from here is going to take you back down towards 920. I heard some people banning about the 920, but I don't know, why don't they just take care of business and flush out this low here? And then if you go back all the way here to Macron's election, just something that you may want to keep an eye on. Now, people say you could always, gaps are always going to be filled. Yeah, but it doesn't mean you still have to know the difference between the gaps. I think that the art of gaps has been lost because of the 24-hour nature of most markets now. So you don't get as many of them, but this was a breakaway gap. Area gaps, common gaps are different than when you break away from a major trend that's like broke out and left this gap. So this gap will be filled at 107.23, but I seem to recall it was like 108.50 on the platform or whatever I was using back then. So, but that would be enough, here we are, 108.80. So, maybe we get another low here. Anyway, I can't find a reason right now to, get long. I would sell a rally at 11.20 before I would try and get long. So we'll see what happens with the dollar. And every bear that I know that was looking for a big correction in S&Ps, most of them, at least 80-90% of the guys I read or follow, a strong dollar is part of that equation. We'll see if it's different this time. First of all, we have to see a correction. But anyway, there's nothing that I can find besides maybe some short-term divergences that could generate a pop that makes me want to be aggressively bearish a dollar here. And why can't we still be bad and not make new highs in the dollar and, rally back to 99? That wouldn't be a new high. In fact, what's this measuring if you want to call this a neckline? There's 9636. Okay, 146 from here, 99.10 here. That's it. That's what I have today on MLK Day. We could all use a little bit more peace and caring about our fellow man. So not a bad day to remember someone who preached and fought for just basic civil rights for his people. Okay, and with that being said, another guy who fought for America, Blake Morrow.
Hey, Dale.
Huh? America. Everything free in America. Oh, that was West Side Story. Go ahead, man.
So, well, happy Martin Luther King Day. Yeah, today's, it's a very important. It's a very important day of remembrance, and is a very, he's such a symbol to not only America but to world and equality. And it's today's a really special day. I remember. I say we, in Arizona. Arizona was like one of the only states that didn't
Yeah.
like observe Martin Luther King holiday at one point. I was like, well, that's weird.
Yeah.
I was a lot younger at the time, but anyway,
He's like an American Gandhi.
yeah, I guess you could look at him like that. Now, I did not know he
fool
had
around.
an affair. I guess
Oh, yeah.
I had no idea about that.
Yeah.
Oh,
You're the only married guy I know that's. Oh no, you know what? I think the whole ForexAnalytix teams are true blue men. How about that, huh?
We try to be. You know,
Because you guys can't get anything else.
this is probably more correct than anything.
Look, I know I'm living it. So anyway, go ahead, buddy.
So anyway, you know, it's been a really slow day in the markets. You know, I woke up and it's just like, okay, nothing's moved. I do not expect a lot of movement today. You know, as the U.S. is on holiday, it's going to be really quiet. We got a little bit of volatility in, you know, in European trade, but not much. I mean, the euro's bleeding a little bit right into the support zone. You know, does this give me, you know, any reason right now to be long the euro? No, but you know what I was thinking here. You know, these are the types of days that if you can get some stops to get triggered, you know, you can look to play the opposite side of that. Like for example, I'm going to use the euro as an example. This support right here at let's just call it roughly 110.80. Now, looking historically in the euro, just going back for the last few weeks here, let me grab this and let me just show you the importance of like these levels that are just below. So you can see a lot of lows held there, a lot of lows held here, right?
Yeah.
A lot of lows down here. Yeah. A lot of confluence down, you know, maybe into the 60s. So what I'm thinking is if they could really try to press the euro a little and get some stops triggered, I might actually try to trade the other side of it. Just, you know, these are the types of days where I'm just trying to make 10 or 15 pips. You know, if I can make 10 or 15 pips and, you know, make a little bit today, that's what I'm thinking. So if we can get like a move down towards, you know, this 110, let's say 110.70, I'd be willing to play the other side of that, you know, just knowing that we have a lot of support down here. So like, for example, if we get a little flush, then I would maybe take the long side of that, right? Like I said, it's not like I'm going to sit here and go, oh, I'm going to, you know, I'm buying the euro here because I'm looking for a move up to 114 right now. No, this is more of, you know, just trying to keep myself busy and be productive on a day that, you know, is not going to probably yield a whole lot. Now, I may be wrong, and, you know, this support may just end up holding and we bounce back above 111 from here. And if that's the case, I'm probably not going to be trading the euro. But I'm, you know, again, I'm just trying to find what some small opportunities may be in the market. And this is an example of something that I might be able to do today. And if you even look at this last move, the 127% extension comes in at 110.60. So, you know, you have a lot of support, not only by these little spike lows, but also 127% extension of the last rally comes in, you know, 110.60. So if I can get bid or hit on a bid at 110.60, and I'll put in a little alarm down here, I'm willing to try to play that. Again, what I want and what I get are two totally different things, more than likely. I look at the market and I always try to envision what I think is going to happen, but that doesn't mean that is going to happen. I tend to be pretty good at, you know, figuring that out. That's, you know, what's kept me in the business, you know, for more than 20 years is being able to kind of, you know, see these little opportunities when they arise. But that doesn't mean that it's going to happen. But if it does happen, I am willing to take a shot at it because, you know, at that point in time, it's all risk reward. So if I buy the euro down here, only risking 10 pips to make, you know, 20 back, well, that's decent risk reward for a day like today when there's typically not a whole lot going on. So that's kind of what I'm looking for at the moment.
Nice coaching.
Yeah, we'll see. Now the cable, I've been buying this on dips, and I have not picked it up today. The thing is, it's down in my buy zone. This is like where I want to be a buyer of the cable. Cable scares me a little bit more because this is one of those currencies that, as you guys know, can, you know, give us, a quick run for our money, one direction or the other, whether it's, a quick 50 pips higher, 50 pips lower, even on a day like today. So it's like, I was like, well, I'd rather wait for some better liquidity to be long the cable, but I may end up regretting that. I like the pound down here personally. I actually, like being a buyer down here. I just, um, I just haven't pulled the trigger yet this morning. But one of the other issues that I have is this little false breakout. You can see that it's been notated up here about the false breakout above the triangle. We were talking about that on Friday. That was well, in the chat room anyway. If you're part of the ForexAnalytix community, we were discussing, man, that false breakout, excuse me, doesn't look good for the cable. And so I figured it was going to come back down here, from Friday, and we have. But again, I just haven't taken the position. If you guys are maybe more prone to taking a little bit of risk down here, this might not be a bad place to be on the long side of the cable. I wish I would have had my bid in. I had a bid last week to buy it down here in the 70s, and I pulled it over the weekend, just because it's over the weekend. I didn't want to have a bid out there just sitting empty, and just in case something happened. And of course, if I would have just left it in, I would have been filled, and it would have been a nice nice 30 pip gain picking it up down here. I just didn't do it. So maybe if I get another dip back down into the 70s, I might take advantage of the cable, because I know there's a lot of support down here, and again, that might coincide with the euro dollar. Like let's, going back to the euro, that's with, maybe the euro just sitting here at support and maybe just dropping through that support and whacking some stops. That might be the catalyst that drives the cable down to 129.70. So that might be another setup that is worth your time. I do want to spend a little bit of time though today. I know it's slow. I want to spend a little bit of time talking about the dollar yen. And this is, I did spend time on the week ahead video. If you guys saw that, then you heard what I had to say for the most part about the US dollar Japanese yen. But I'm going to reiterate everything that I've been talking about, and I just want to say that the dollar yen. I talked to a lot of really, really talented traders, and the majority of them feel that the dollar yen is going higher. Most of the bank research that I've been reading, actually, let me take that back. All the bank research that I've been reading thinks the dollar yen is breaking out. The dollar yen, in my opinion, is at a huge inflection point. We're at the multi-year trend line, which comes in at roughly where we're at, 110.20, 110.30. And I'm not fully convinced that we are breaking out yet. I mean, as far as I'm concerned, at this moment, there's no reason to be short the dollar yen. While we're above 109.70, this little breakout point here, there's no reason to be on the short side yet. But I can't help to think that with everything that has happened with equities, with equities rallying and at all-time highs, the dollar yen should be way closer to 115, not 108.30 or 108.20. So, like I said in the week ahead video, there is a risk of it just playing catch up. And I think that's what most traders are thinking right now, is the dollar yen is going to play some catch up. We're going to see the dollar yen start to rally as bond yields start to rally, and we're going to see the dollar yen just start blasting higher. Of course, that's a risk. But I'm going to tell you my trade setup, my trade setup is not trading it to the long side. It's not. My trade setup is, and if it does break to the upside, which there's, I would say there's probably a 60, 70% chance it does break higher. And maybe I will trade it to the long side, but that's not the trade I'm looking for. The trade I'm looking for is if we break back below 109.70, because as I just mentioned to you earlier, when I say earlier, I'm talking 10 minutes ago, the thing that I said to you guys earlier is I love to trade false breakouts and false breakdowns. They yield great opportunities when you can find them. It's not, all the time that you find them. But in this case, everybody thinks that the dollar yen is breaking out. Maybe it is, maybe it is. I'm not gonna argue that point because I don't really care, frankly. But what I do care about is if the dollar yen breaks back below 109.70, because I think if we break back below 109.70, you're going to get a liquidation of everybody who is long, not only the dollar yen, but all the other yen pairs, whether you're talking about the pound yen, the euro yen, the Aussie yen, the New Zealand yen, it doesn't really matter. It's just everybody that's playing yen weakness, expecting for a move towards 112, is going to be wrong-footed below 109.70. So that's the trade that I want to take. I'd rather catch everybody wrong-footed and say, oh crap, I got to get out of all of my, yen trades long, and know where they're wrong. So, what I try to do on, in these types of situations is go, where, if I was long the dollar yen, where would I say personally I'm wrong? Where do I pull the plug and say, you know what, I just don't want to be long the dollar yen anymore? In my opinion, it's back below 109.70. So if we break back below 109.70, if I was long, I'd be like, get me the hell out. And so for me, as a predatory type of trader, where I'm trying to capitalize on, figuring out where the market's wrong, in this case will be back below 109.70. So now, your rebuttal to me might be like, well, Blake, why don't you just short it now if you think it's going down? Just because I think it's going down doesn't mean it's going down. Like I said just moments ago, I actually think the risk is for it to break higher, but that's not my trade. My trade is I actually want it to reverse, catch everybody off guard, and then I'm going to capitalize on that. So, and the one thing that I need confirmation of it. So the confirmation for me would be a break back below 109.70. And like I said, and I'll tell you this, I don't know if it's going to go from 109.70 to 109 to 107.60, 105. I don't know. And I really don't care. My goal in a situation like this is to, if I see it failing, and I'm pretty confident it's going to fail, maybe I got gold rallying to new highs, maybe yields are dropping like back through 128 on the 10-year, or maybe we see the S&P drops back below, I don't know, 3250, something like that says, oh wait, the dollar yen is actually going to reverse. Maybe I do end up getting in early, but my intent here is to try to get short on a break back below 109.70, get my stops to break even as quickly as possible and see how far I can take it, and maybe take half off at some point, or try to just try maybe even just to make a scalp. So that's kind of the setup that I'm looking for. And I know I talked about it on the week ahead video, but maybe that's just a little better flavor of actually how I'm trying to trade it. I know a lot of you might say, well, I hear what Blake's saying, so I'm just going to go ahead and short it now at 110.18. I don't think that's the right trade, because I don't think we have any confirmation that it is going down below 109.70, and I feel a lot more comfortable about making that assumption that we are moving lower. But we are up against a lot of trendline resistance. I think this is key. It's pretty interesting how we can't break higher with stocks at all-time highs, but you can also make the argument, hey Blake, S&Ps have come off a few points and the dollar yen hasn't moved anywhere. I can argue that as well. So, you could say, well, the dollar yen just isn't really moving, just in general, and that's actually a pretty true statement. It's really not moving anywhere. But again, that's what I'm looking for, and obviously I'm still following the S&P, because we're sitting here up against the big confluence of resistance. I still think that the S&P can accelerate higher from here. But at the same time, I sure as hell don't want to chase it, but I'm, not necessarily bearish. And I have a small S&P short going right now, personally. I sold it on last Thursday. But it's a small position. It's what I call a tracker. I just keep it open, just so I'm actively managing it. So this way I don't forget about it. Keeps me more focused on what I'm trying to do here. But what I'd like to see, in order for the S&P to really show a reversal, like where I'm adding is way down here. It's a break below this trend line. It's not, not at current levels. There's no reason for me to add to a short, and it's a futures trade. So it's like, I don't have, it's very manageable and exposure. I don't have to worry about carry costs or anything like that. So, that's basically what I'm doing here. Again, there's no news out today, so there's nothing that is that we have to be paying attention to. The BOJ is going to be later tonight, which maybe the yen finally is influenced by the Bank of Japan, but it's been quite some time since we've seen the BOJ actually affect the yen or the yen pairs, and maybe tonight is the night, but I kind of doubt it. So anyway, with that being said, I want to see how my colleagues are doing. Steve and Stelios. Steve, I left you a lot to talk about today. You got all sorts of palladium and gold and cross rates, and I left you a whole gamut of stuff to talk about.
Indeed, no complaints there.
So, how was your weekend?
Good. Besides the fact that the little dude got sick again.
At some point, Steve, you're going to get past that situation where kids get sick. But the problem is I would say it's up until they're about 8, and they finally realize, oh, if I wash my hands with antibacterial soap, I don't get sick. And
if I don't constantly keep putting them in my mouth.
yeah, exactly. It took one of my youngest to about 8 to figure that out, and then the other one figured it out way earlier than that. But it's unfortunately until then you're kind of stuck with it's an ongoing thing. So anyway, very slow day today. The FX market, Euro's trading at its lows in the session right now. So let's see if that Euro breaks into the 60s. I'm kind of hoping it does. But other than that, pretty quiet day. And what are you looking at?
At least 3 of the mainstream currency tickers, I'll say, because one of them is the index, the DXY, Euro USD, and Aussie USD, at quite key support resistance areas. So 97.70 is a very key area for the DXY. At the same time, 110.80, as you said, but both the Aussie USD and the Euro USD are currently testing key support areas, which are also potentially necklines of head and shoulders formations.
Right. So, well, yeah. I'm gonna let you take over the screen and show everybody what you're discussing. So, but before I do that, I have to mention, and I know it's a holiday, but guys, this is our last week of our pricing that we offer only once a year. So or actually it's twice a year. We do it again in September, but you don't want to wait till September to take advantage of this. So this is the last week to, if you want to be involved with Forex Analytics community, this is the way to do it. Also visit our webinar sponsor, which is Forest Park FX, because if you do that and they can help find you a broker that, you know, pays you a reimbursement where you can be part of the Forex Analytics community, possibly for free. You can be involved in their in their reimbursement program. So make sure you visit Forest Park FX for further information and to take advantage of our annual offer. So Steve, I'm going to pass it over to you.
Thank you, Blaker.
Thanks, guys. And hey, Coach.
Dale?
Are we dealing with a solstice? Okay, never mind. All right, I thought I wasn't sure if we're dealing with some astrological thing as of the 18th. I thought I heard him say something like that, Steve. I don't know.
Oh, I wasn't. I was on a meeting, so I came in like 5 minutes late. So I lost
okay.
the first 5 minutes.
All right. Well, I'll let him talk about it. All right, you guys have a great one.
So what do you think about this one, Blake? The Aussie. I mean, multiple confluences of support here.
Yeah, I mean, if it can...
Previous broken channels, trendline resistance as support, 50% fib of the lows to this high, and horizontal support area. I think it's quite a key level here, right?
Yeah, it is. And, you know, instead of, for me, like, I don't know if I really want the dollar exposure. For me, I would trade, you know, Euro Aussie, Pound Aussie, something like that to the long side.
Yeah, but at the same time, since you mentioned Euro Aussie, look at the Euro USD, exactly the same formation.
Yeah.
So it's not like it looks like the Euro is going to necessarily underperform or overperform the Aussie, because for the time being, they seem to be forming the exact same potential, bearish pattern. Now, are they going to trigger? You know, we're going to find out by tomorrow. As you said, I'm not going to be trusting any price action I see today, you know, for obvious reasons. I mean, liquidity is quite thin. So I think tomorrow is going to be, you know, quite important for us to see if these flows are going to be reversed and we're going to find support here or not. But I do think that, you know, they're at pivot areas as well as the DXY, because, you know, this is also a potentially bullish formation here in the DXY if we break above 97.70. So that's what I'm focusing on.
Okay, that sounds great, Steve. Well, I'm sure everybody wants to hear what other analysis you have. So, good luck today, and good luck, everybody. I'll see you tomorrow on the on the Face webinar.
Have a good holiday, Blake.
Thanks, guys.
There's nothing happening with the moon except for us lunatics here.
Gotcha. Okay.
All right, buddy. All right. Hey, Steve.
Hey, Coach. How was your weekend?
Okay. Yeah.
Good.
Yeah, yours?
Fine. No complaints.
Looking forward to hearing Stelios. He has a lot to say.
Same here.
I am, yeah, so much stuff.
He's going to use his webcam for something that you suggested.
Oh, maybe. Let's hope so.
Guys, seriously, I have nothing to say. We have the World Economic Forum today. It started today, and apparently Lagarde is due to speak later today. I don't know where or what about, but we have the ECB coming soon. But really, absolutely nothing to say. I really don't know. We have no data today, you know, very minor stuff. So I guess we're all waiting for tomorrow.
Yeah, tomorrow we have, speaking of the pound, that is one of your favorites. Tomorrow we do have a decent amount of pound influencing data, right? We have unemployment, average earnings.
Yeah, that's the main one, yeah. So they're always, you know, the stuff that people look at. But
yeah, and with the pound being, as Blake showed earlier, with the pound being at quite a key juncture, because, you know, if we consider this as an important triangle here, we've run out of space, literally. I mean, we've exhausted this triangle, and, you know, we need to break out one direction or the other. So let's see what we get from here.
Yes, sir. Plus, remember 31st of January, official Brexit date coming up.
Yeah, it's the deadline. Yeah.
Yeah. So
what do you think? What do you think about that, Celio? What does your intuition say? I mean, we're just like literally 11 days away from it. What do you think?
Well, it's happening, right? There's no doubt about
Yeah,
that.
yeah.
The question is, they have now until the end of the year, I think, to formalize how things are going to work in terms of trade, in terms of all sorts of stuff. So, from what I've seen so far, Boris Johnson looks like he wants to get things done, and he has been, getting things done. Contrary to Theresa May, who spent 2 years just extending. But I really don't know. I mean,
She should have been a central banker, extend and pretend.
Yeah, I mean, my medium-term view. If there is any kind of big pullback in the pound, I will be buying it. But
no, I'm with you.
But
I'm with
you. Boris Johnson, I've said this before in this webinar. When he got elected, before he got elected, I was thinking, oh no, if he gets elected, it's going to be all sorts of trouble. But because he's unpredictable, right? And he always has been. But he's been getting things done, and I must admit, he's been more positive than I expected before he got elected. So, overall, I still remain, mildly positive on the pound, and if there is a pullback, I'm going to be buying into it. So that's my view.
Speaking of which, is there a chance we have a third level here? We're not far away. If we also take into account that trend line, we're not far away from that as well. Stelio, we have a question for you based on what we were talking about having to do with Brexit. Says, our friend here says, UK has made comments that they are looking for a Canadian, I'm assuming he means, style pact. Is this possible without regulatory alignment? That's a question from our friends.
Good question. They've talked about Canadian style, Norway, all sorts of stuff. There's going to be a lot of technical issues which I don't know, so I need to I can't answer this off the top of my head, I'm afraid. So I'll need to research this a little bit.
Yeah, and I think we are going to be looking into new kind of deal making here. I mean, not necessarily working on precedents. So the whole issue here is if you're optimistic about them sooner rather than later being able to achieve some decent breakthroughs having to do with deals with existing partners or not. I'm also positive about it. I think it's in the common interest of everybody to get to the bottom of it and put something in place. So I think that the path of least resistance is finding some common ground and going forward. Stelio?
No, I agree. I don't have anything else to add.
Okay, so Coach, anything from your side?
It's really amazing that there is no play or no concern, and I understand the psychology that this is only the third time in U.S. history that there's going to be a trial on the Senate floor for impeachment. And, it's not that that's a surprise anymore to the market. What the surprise to me is I was around when Clinton, Nixon was, I was still in college and in the middle of the cornfields, had no idea about trading. Okay. I was going to school and, but, even with Clinton, and I know people brought the analogs for Nixon, we did enter a bear market during that time. And there was at least a market correction when it was announced Clinton was going to be impeached. And we've had really, not the market just moving sideways, but moving parabolically into it. And there seems to be, which is how you get surprises. Everyone expecting it. I talked about this with Blake, and he said, well, it is politics. It is a layup, that this just going to be a show, and I could see how it could be. And just like Blake was talking about, most people are looking for upside in the yen, but that's not his trade. He wants to look for a breakdown to do it under 109.70. And we'll see. I mean, it's possible, just having witnesses, and maybe he isn't impeached, but if they're able to sway 4 senators to call Bolton and a few other people, what might happen, even though he's not going to be removed because that would take a supermajority in the Senate, it could end up influencing the next election, where then the choice between maybe someone as radical as Sanders and as unstable as Trump.
Sanders looks, and good that you're making this connection. I didn't want to interrupt you.
Yeah.
But I'm in total agreement with you. I mean,
you did, man. You know what? We all have to know what our mission in life is, and Steve, you and I, our mission is to interrupt people.
Yeah, so I totally agree with you, because in essence, what you're describing here is the huge, and that's why I believe we're coming closer and closer to a key pivot point in the markets, where this huge disconnect between sentiment and reality is going to come to an end. So although I do believe that the chances that the impeachment is going to produce something tangible are extremely low, though that is still a testament that this market is ignoring anything and everything that could potentially be negative, and completely ignoring it. I mean, it's refusing to price it in even a little bit. So you just mentioned Bernie Sanders, for example. Bernie Sanders looks from the polls to be the favorite from the Democratic Party as potentially being the next nominee. Now, the market, for some reason, is completely discounting the possibility of a Democratic victory, which a huge chance is that either Sanders or Warren, which both of them are, being in the camp of democratic socialists, are going to win. If that happens, as you understand, the market will have to immediately reprice company earnings, because they've both been saying that they want to tax more the companies, they want to tax more the rich and everything else. So the market is acting like Trump has zero chance of losing the next election, which is far away from reality, right? Now, I'll admit that there's a decent chance he's going to be re-elected if the market doesn't implode by then. But are those chances like 5% or 10% or below that? No. I mean, the chances are at least 30% that he's going to lose. And if that happens, the market is going to have to violently reprice what is pricing in going forward, having to do with company earnings, and hence S&P and the rest of the indices targets. Needless to say that there is a chance that if we go into a recession or the stock market tanks by then chances that Trump is going to be re-elected go down, dramatically. So same thing with the US-Chinese deal. I mean, the US-China phase 1 deal was nothing. I mean, not even the tariffs were removed. And as a deal is as shallow and as unimportant as it could be. And Trump himself said that there is a chance that there is not going to be a phase 2 deal until after the election. So in essence, he indirectly pinpointed that there's a chance that we're not going to see anything more happening, because who knows what's going to happen after the next election, and what the incentives will be for a deal to go forward, both from the US and Chinese side, etc. And the market still doesn't care about any of that. So I'm totally with you.
Okay. That was a long interruption.
You see, they might try to impeach Pence too. Then Pelosi is president, much potential for negative sentiment. I consider that even a more extreme possibility. I mean, managing to impeach both the president and vice president, and if I reviewed the data on Fed balance sheet, no, actually I didn't. I promise I'm going to do it today. I had quite a busy weekend. I had a
no excuses. You promised
6
them for
and
today.
yeah. So yeah, I promise I'm going to do it today. But as I said, I don't expect it to have to have fallen. I expect it to probably be higher. But you know, I'm going to let you know tomorrow. Last time I had checked, it was at 4.15 roughly, if I remember right, 4.14 trillion. I remind you that we reached a low at 3.75 roughly. So we've seen a move higher that is very, very substantial considering the you know, the period of time and you know, the V-shaped bottom that we created, because we went from, you know, monetary tightening is on autopilot to reversing course in, you know, in zero time. So you know, it is what it is. Tuesday, January 14th was the last one. Yeah, no, that's the last one I checked. I'm gonna check tomorrow. It was 4.17. I have noted it down. I saw a dip in the first week of the year. Yeah, there was a dip at some point from like 4.17 to 4.15. It was like, you know, a very, very, very small dip, as you correctly said, but, you know, nothing moves in a straight line, but it was a negligent dip. I mean, we went down by something like, I don't know, 20 billion, which, you know, for the balance sheet of the Fed is nothing. So yeah, let's see what we did this week. But you know, we've definitely moved substantially higher. Now, there are questions about the Euro USD, the pound. Nothing to add to what I said before. 110.8 is super critical here in Euro USD. You can see why. Below that, we trigger a head and shoulders formation, which should take us, you know, towards 109 once again. Same deal with the pound, meaning not a head and shoulders formation, but we are at a pivot area here as well. I'm monitoring this triangle. As I said, we've run out of space. So let's see what happens by tomorrow, and if this is going to produce the next move. I'm still favoring a move to the upside, but it's not unlikely to see one more leg lower before seeing that continuation higher. Okay, so it's not that, you know, I would be strongly advising in buying it right here, right now. But in general, I do favor the upside. Now, the Aussie USD also at the pivot area, triple confluence of supports down here below 68.50. You know, we open a lot more downside. I mean, we should be headed back towards the lows that we had close to 67 cents. So, you know, quite an important week. And most importantly, as I said, the DXY should prove here if this was a corrective move lower. I have to admit that the nature of the move does look like it's corrective so far. I mean, it's choppy, it's overlapping, it's slow. Of course, the move higher was of equivalent characteristics. That's why I'm not so enthusiastic about the upside, because it's not that the previous move to the upside was impulsive. So now, you know, in contrast, we have a move that is clearly corrective, you know, for me to be enthusiastically looking to the upside. But in any case, 97.70, 97.80 is a key resistance area. I think that if we do break above it, most likely we're going to be headed towards 99, which is an important resistance area. So there's going to be more upside to come in the days ahead if we manage to close above that resistance. Now, Blake mentioned palladium. I'm still building a position here in palladium. My cost average, not a full position yet, is at 2,425. We've retested almost the high today that we had on Friday. This move is completely parabolic, as you see. Daily RSI is above 92, and the DSI is, let me have a look at it. The DSI is, here it is. DSI 90 for S&P, 93 for the Nasdaq, Palladium. Palladium 95, one of the most extreme readings you can ever see. I don't ever remember seeing a reading above 96 or 97 in any instrument ever in the DSI. So 95 is like almost as extreme as you can ever see in a DSI reading. Same thing with the opposite. Like if you see a reading of 4 or 5, it's like, you know, the most extreme you can actually see. It means that, you know, out of 100 people, 100 investors that they asked, do you think it's bullish or bearish? 95 out of 100 believed that it was bullish. And that's a question about the short term, right? It's not about making assessment of what the previous trend has been. I mean, yeah, the trend is obviously bullish. There's no question about it. But, you know, the question is like, where do you see it going from here? Higher or lower? It's not like, do you think if it's in an uptrend or a downtrend? So as you see, you know, everything that has to do with Palladium is super extreme at the moment. You know, any momentum indicator, any sentiment indicator, everything is like super extreme. It has gone completely parabolic. If you zoom out, literally, if you zoom out just, you know, to go back to 2018, this last part of the move looks literally vertical, right? Almost 90 degrees higher. So just compare it with the previous moves. I mean, this is literally a vertical move. So I think, you know, we're getting very, very, very close to a big reversal here. Even if this proves to be a corrective move, I would still expect it to be sharp and deep. So I wouldn't be surprised to see within like a couple of weeks a move from like 2,500 back to 2,000, which is the last support resistance area we managed to produce. And I'm saying the last one because if we assume that today we close positive, it's going to be probably that's another type of record. I don't remember ever seeing a market do that. It's like 4, 6, 8, 10, 12, 14, 16, 18, 19 consecutive up days. So no pullback of any kind for 9 consecutive days. And actually, you know, the move had accelerated going, you know, as the moves were, as the days were progressing, the move was becoming even more and more vertical. So, you know, those are all the characteristics that you expect in an exhaustive push higher. So this type of market environment is completely unsustainable because once the bulls give up, you know, there is nothing to go, nowhere to go but lower. A market that has gone vertical can't stabilize at the highs for a period of time and then continue. It could have done that if the previous move was orderly, for example, like this one, like this part of the leg higher. Then, you know, if you have an orderly move higher, then you can perhaps stabilize and correct over time. But in this type of a move, there is no such a thing. So, you know, I still like this. I have 2/3 of a position lower, and I'm willing to add even a little bit higher if needed. It is a risky position. There is no question about it, right? So it's not for the weak-hearted, and I'm not advocating that somebody should, you know, try to fade this. But I am fading this, and you know, knowing full well what I'm doing and you know what I'm risking. Hi guys, your opinion on gold versus pound? Okay, that's quite interesting actually. Sure. Gold versus pound. You can see the same thing that you see with most pairs, and you know this is roughly this, which is there you go. So we found the low September 2018, and so far we've had 2 types of moves: impulsive move higher and corrective moves. This is another corrective move. We broke above this channel, so I see nothing that doesn't point to further highs, to you know, to a continuation of the move higher, so to new highs eventually. Now there are going to be pullbacks on the way, but you know, basically as long as we're above like 1,160, you know, keep looking higher. So it's, you know, it's quite a clean move. This was also corrective, as you see. There you go.
How's my breathing today?
It's fine.
Okay. I forgot I still have my mic open. Usually people go, "Oh, where's that dragon?"
So gold and silver against the dollar, nothing has changed here. I mean, is the correction lower over? Not sure yet. Likely yes, but to be fair, not 100%, right? I mean, as I've said multiple times, it's hard to assess how corrections unfold. I'm pretty confident that this is a corrective move. Now, is it over because we broke above this wedge? Might be, might not, because this wedge is a little bit arbitrary. I mean, somebody can say, okay, why is it a wedge and isn't it like a channel like this?
Yeah.
There's no answer to that. So, right. In order for us to get confidence, to be more confident that we're headed higher, let's first see a higher high, which means above a daily close above 1563 in gold and above like 1820 in silver, and then I'll tell you that yes, we're headed to new highs. Anyhow, I believe we're headed to new highs, but I mean, we're headed immediately, or we're headed after a longer period of consolidation.
No one can know what to do with every market all the time, period. And you know what? Take the pressure off yourself this year, guys, and realize it's okay to say, I don't know. Okay? Say it. Because it's a hard thing to say, because people don't want to say, I don't know, because they think they should always know. And no one always knows. So take some of the pressure off yourself. What you do has enough pressure in it anyway. And,
actually,
the good trades will hit you in the face.
Huh? Actually, Coach, I think that one important element of maturing as a trader is to not push yourself to think that you have to know for every market.
Yeah, that's what I'm saying.
Because admitting that a market isn't looking good, it isn't looking like it has a clear direction, is a very, very important element that is going to increase your P&L by not increasing your L, your losses.
Yeah.
By you committing in a market that is unclear, but you're forcing yourself to take a position in.
See, it's your ego that forces you to think you need to have an answer.
No, okay? You don't. Absolutely, you don't.
Yeah, there you go.
You don't. Take your ego out of it. And many times, many times, you'll get rewarded for that. For example, you've definitely been bored of hearing me say that. I'm not looking to be involved until something happens with USD yen and Euro USD.
Yeah.
I mean, I haven't been involved with trading them. I can't even remember since when. And it's okay, right? Because, the market has proved that, if I try to get involved, since I'm not a scalper, I would have probably been hurt in, if anything, right?
Yeah.
So why get involved?
Sometimes the right trade's no trade, but I just want people to take the pressure off themselves, that by, realizing that it's okay to not know. A lot of people don't feel okay about it. I should know. Well, let me look at this time frame. I need to know. Really, if you just sit back, there will be trades that will just be so compelling where you're not going to say, I don't know. You'll be saying, I think there's a high probability now that I see this, that this can happen, and this is where I'm wrong if it doesn't. So, just let that happen. So,
yeah,
from a dinosaur.
Yeah, and actually, you should not only you should be feeling fine with not knowing for some markets, but you should, push yourself to categorize some markets like the markets you don't know, because if you think you know about what's happening in all the markets, probably you're doing something wrong.
I also heard this, Steve, if you can't remember the last price of the markets that you trade, you might be trading too many instruments.
Yeah.
That's a decent test. Well, is that a wrap, buddy? Or you have some more questions you want to answer?
We have a comment here from Galaxy who says...
about China.
Yeah. Two more questions. Yeah. He says, what are your thoughts on the following statement? US-China trade deal. World has lower exports to China at the expense if the US has lower trade deficit, which results in a global shortage of dollars causing a liquidity crunch. Chinese yuan has a tendency to weaken as yuan need to be sold by dollar, which results in higher Chinese interest rates to support yuan as they have pledged to keep yuan stable. When Chinese reserves are lower, so less buying of treasuries. This is the definition of a disaster. I think that what supports mostly the dollar, and when that reverses, the dollar is going to reverse and is going to reverse violently, is the fact that the US markets have overperformed for so long, like roughly a decade, that there is a lot of money coming to the US, which means that you need to buy dollars to invest in US indices. So once this rally is over, which we're much, much closer to the end than to the beginning, there's no question about it. I mean, we're in the 11th year of this rally, already a record, an all-time record having to do with like a bullish market and an expansion in an economy, for the US at least, because, you know, there is the exception of Australia. I
saw a tweet that Apple's market cap is bigger than the whole Australian market, all the stocks in Australia.
I think that that's also the case, if I'm not mistaken, with the DAX, which makes it even more scary.
Oh, yeah.
Yeah, which makes it even more scary.
Yeah.
Huh. Yeah, because let's see, DAX market. Let's see if they have a market capitalization for DAX. They don't they have a total? Market capitalization 972 billion. That was in 2017, but from 2017 it's not that we moved much higher. So probably I'm right, coach. So probably I'm right. Apple is worth more than the whole DAX, and we're talking about the German stock index. We're talking about one of the strongest economies ever, Europe, with one of the strongest fiscal positions ever. Because if you see Germany deficits, look at this. These are the German deficits by year. Look at it, dating back to 1991. Surplus, 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 small deficit, surplus, 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 zero, zero, small deficit, so small deficit, small deficit, small deficit, lower than 2% deficit. We're talking about this type of an economy, right?
Yeah. Pretty amazing.
Yeah. The least you can say, yes.
Yeah.
Yes. So we're talking like one of the steam engines, the steam engine of the whole European Union, and one of the steam engines of the global economy, and a country that actually has very solid, a very solid fiscal position, opposite from the US. And a single company is worth more than every single company on the DAX, which are 30 like big companies, right? So now, you know, what do you think is going to happen within the next 10 years? Would you take the over or under? Do you think that within the next 10 years this is going to reverse, or you know, the gap is going to increase between Apple and the 30 companies of the DAX?
You'd be looking for a mean reversion.
Oh, absolutely. They
really shouldn't be worth more than 7/8 of the DAX. Yeah, anyway. All right. Oh, tomorrow I have a great guest. Mark Newton's going to be with us.
Oh, so, that's actually great. Yeah, that's great. Having Mark
kick off the week. I remember last time I talked to Mark, he saw some troubling cycles in spring. We're not that far away from spring, couple of months. Yeah, okay. So we'll have Mark
Let me
Newton.
cover a couple of things because we have questions about them. One is our friend here is seeing a breakdown in copper. There's absolutely no breakdown in copper. I can tell you though the following. You say that you're short. If you shorted it, during the past few days, it could work because you have a very nice entry point. Because I was monitoring of this ascending channel. I was actually looking when we were back there, I was looking for a pullback down towards 272 and then a move again towards the channel resistance. We saw a pullback, but it wasn't 272. It was a little bit short of that. And now we retested the channel on the 78.6. Now, if you shorted it the last few days, I will hold this position, put my stop loss above this high at 288, and you have a very, very decent risk reward ratio. But there is definitely yet no indication that this is a breakdown. Okay, so looking for a pullback makes sense, but considering this a breakdown, no, it definitely isn't a breakdown yet. Now, having to do with another friend that is asking about platinum. Platinum has broken out from the multi-year trend line. Pay attention though to this area, because you can see, if I zoom out in the chart, you can see that this exact area, 1025 roughly, let's call it, has acted multiple times as support resistance. So, I would pay close attention here. I wouldn't be buying it exactly here. I mean, you want to buy it, look for a pullback, towards like 980, and, look for a continuation higher from there. And we had one more question. Let me find it. I lost it. I think it had to do with euro yen. Let me see. Where is it? Oh yeah, euro kiwi and euro yen. So I was right. So I'm going to cover that, and we can call it a day, and we'll be back tomorrow. So euro yen and euro kiwi. Let's start with the euro kiwi. Euro kiwi, I still like it to the short side from here. And why is that? Because when we were breaking down from there, this is exactly what I drew, which played out perfectly, that we might see a support from this support area and then a retest of that broken symmetrical triangle trend line support, which might act as resistance. So I like it to the downside. I mean, the risk reward is nice against 169.30. So, let's see if it's going to play out, but I still like it for one more low, at least to retest that low at 165.26. And having to do with euro yen, last but not least, still appreciating within an ascending channel, got rejected once again from this horizontal support resistance area. I'm not a fan of it. I would want to see it lower because of yen, but I would only subscribe to that thesis if we see a breakdown below 121. And why do I mention 121? Because 121 is going to be the confluence of the 50 DMA, the 200 DMA, and this ascending channel trend line support. So as long as we stay above 121, you can attempt being long, especially if we see a pullback. But I would trade it to the downside if we break below 121. But since the rebound has been corrective in nature, I wouldn't be trying to play to the upside. I would much rather play to the downside if we see a move below there. Okay. Thanks, Coach.
Okay, buddy. So we'll see everyone tomorrow. Mark Newton, CNBC contributor, one of the better analysts I know. So take that, CNBC. All right, guys. Have a great holiday. It's slow. Go enjoy. Shut down your workstation. But don't forget to join. Be part of our community before you do that. And don't just count your pips, count your blessings. I'm looking for a good week. Here I am, Dale crying wolf. S&P high. Failed breakout in the end. Breakout to the upside in bonds. Let's see how embarrassed Mr. Market can make me. Go ahead, Mr. Market. I've done my work. Prove me wrong. If you don't go into trading with that kind of mentality, hang it up. All right, everyone, have a great day. Hey, Ingmar, how are you? Okay, thank you, Brock. Galaxy, good luck with your copper trade. And we'll see everyone tomorrow. So, Steve, maybe you have to end. Maybe I can end it because it's still your screen up there. Can you end it, bro? You got it. Okay. This will only let me.
Velu is the host. That's why. No worries. I'm gonna take the host. Okay, I'm gonna end
All
it.
right.
Bye
All
bye,
right,
coach.
guys. See you. See you, Steve.